Today I'm going to show you how to trade options on earnings to make crazy returns. Before this video begins, if you are new to trading, please consider subscribing to my channel. I have multiple beginner guides on how to day trade or option trade. So stocks tend to move big after earnings, but option premium is often overpriced. You want to make sure to look for the expected move. What's the expected move? Well, that's when you find the option chain by adding the at the money call and put prices together. If the expected move is $5, the stock is 100 and the market expects it to move to either 95 or 105. In the most simple terms, I'm going to show you my strategy. Pretend this line is the life of the contract. At the end is the expiration. This red dot is the day of earnings. Let's say you're holding the contract 4 weeks, 2 weeks after earnings and 2 weeks before. The value of contracts typically go up leading into earnings, and when earnings is actually released, the contracts usually drop. Even if the stock does move your direction that you want, it'll still drop because the hype, the volatility, the volume will drop drastically after that earnings day. So the way you make money is in the hype before earnings. So you want to play before earnings. Leading into earnings, you're going to get a nice rally or sometimes a nice short, depending on what the prediction is for that company's earnings. As you can see, Apple just reported earnings and literally it moved like crazy. It dropped 20%, it went up 20%, and then it went back up 20%. So the thing is, with options, it's super risky playing the move after, but playing the move before, that's how you trade earnings.